Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. Shares of Coinbase continue to fall as the crypto winter continues on. The company only has a market cap of $8.6 billion right now, despite having over $5 billion in cash on the balance sheet. But I think there are two things that investors are missing with this company that could make it really valuable long term. Now, there are going to be a lot of challenges ahead for Coinbase getting out of this current situation. But remember, this is a company that now has one fewer competitor after FTX went bankrupt. And with both USDC and Ethereum staking offering potentially hundreds of millions of dollars in profit coming in, I think there's a lot to like with Coinbase right now. Thank you for watching. And while you're here, please subscribe to Rive Investing. I really appreciate the support. Let's get on to Coinbase. And the one thing that we saw really become evident last quarter was the company's windfall profits that has come from the company's 50-50 ownership of the business that operates USDC, or the stable coin that has become really common across cryptocurrencies. Now, it's estimated that that could bring in as much as $800 million in revenue over the next year. That's based on Circle, the company that operates USDC, their SEC filings before they go public via SPAC that was proposed last year. But we also saw a jump in Coinbase's interest income. So there was about $100 million that came from that partnership right there. So this is something that Coinbase doesn't actually have to do a lot of work. They're just going to generate hundreds of millions of dollars of revenue. This is one of these situations where higher interest rates is actually good for the company. Obviously, cryptocurrency has really fallen apart as interest rates have gone up and people have fled from risk assets. But a stable coin like USDC that has assets behind it that are invested in things like treasuries, short-term treasuries, which are extremely safe, those are now paying a much higher interest rate than they were a year ago. That interest money goes to someone, and that someone is Coinbase in part. So this is a windfall that's going to continue for the company as long as people are using USDC. I don't see that changing anytime soon. And this will be a really nice source of revenue and income for the company for the foreseeable future. The other thing that I think investors are overlooking right now is Ethereum staking. Coinbase is actually one of the biggest staking platforms, having an estimated 15% of all Ethereum staked. And what Coinbase does is it stakes that for its customer partners, and then it generates 25% of the return from that staking as its own revenue. So 75% of the money goes to customers. Coinbase gets to keep 25%. This is something that was not a material piece of the business at all because Ethereum was still on proof of work and not proof of stake for the majority of the third quarter of 2022. That changed, and it's going to be a really meaningful piece of the business in the fourth quarter. So keep an eye on that. We don't actually know what the numbers are going to look like right now. That's the unknown at this point. Is this going to be something that's going to generate tens of millions of revenue or hundreds of millions of revenue? Look for that when earnings are released, likely in February. But I think this is something that Coinbase has been working on for a really long time. It's just now going to become a meaningful piece of the business. Look for that to be another additional revenue source in the fourth quarter. Another thing that we can't overlook with Coinbase is the company had some major layoffs in the summer. It takes a little while to work through the system. So those cost savings are not going to hit the books immediately. The third quarter, there were likely still some severance costs, some other costs that go along with having those employees on the books. But the employee number is going to shrink late in 2022 and into 2023. That should reduce the cost base. That should also help reduce losses for Coinbase. So there are a few things going for Coinbase as we start 2023. We have the increased income from USDC that is assisted by rising interest rates. And so every time you see those interest rates go up, that's more and more money that's going to be going into Coinbase's pocket. You have the Ethereum staking, which Coinbase has a bigger and bigger percentage of all the time, around 15% now, but keep an eye on that number. And then also cost reductions and cost containment. So keep an eye on those. I'm going to be following earnings here on Rive Investing. So leave your comments on Coinbase and any of their stocks that you're interested in below. Give this video a like, follow Rive Investing, and I'll see you here next time.